All right, and welcome back everybody. We have a really great video today, and that is the top 6 monthly dividend ETFs that will help you pay your bills every single month. So if you are looking for a way of making monthly passive income and you love investing in ETFs, then this is the video to watch because it's gonna be the high yield, highest paying dividend payouts out there. Just to get started, number one, just because it's a really high dividend payout does not necessarily mean it's going to be a good investment. So be sure to stay to the very end of this video because I am going to be going over what to look out for because not all high dividend ETFs are going to be a good investment. Now, for those of you who don't know what ETFs are, they are simply exchange traded funds. And in my opinion, they're like the greatest investment that you could do for wealth building, simply because they're super easy, they have really, really high performance, and they have low costs. Now, every single year, the S&P Dow Jones Indices does a study on the performance of active management funds versus passive management funds. And what they found is that 85% of large cap funds underperform the S&P index over that 10-year period of time. And when you stretch that out to 15 years, 92% of large cap funds underperform the S&P 500 index. Now, if you don't know what an ETF is, the best way to think about it is like fruit. So imagine that you wanted a bunch of fruit. Instead of going to the store and buying a bundle of bananas, a whole pack of apples and oranges, and the different fruits that you want, you could simply buy a fruit basket, which would give you just a little taste test of every single fruit out there. And that essentially is what an ETF is. Now, in terms of stocks, what's great about that is that it really lowers the amount of time needed to go through and research all these investments. It lowers your transaction costs greatly. And it's also going to save you a ton of time because you don't have to sit there and figure out how to weight your investment portfolio to maximize your gains. And as we get started, as always, be sure to smash that like button, hit the subscribe button, that little notification bell if you are all about creating financial freedom, investing, entrepreneurship, living life in your terms. This is the channel for you, and let's get started with those top 6 monthly dividend ETFs that are high yield. So the first ETF on our list is Global X Super Dividend ETF. This has a ticker symbol of SDIV. Net assets as of February 7th, 2022 is $931.9 million. The total expense ratio is 0.59%. The 12-month yield is 9.14%. And the price per share as of February 7th is $12.44. So the idea of this fund is that it tracks an index of 100 equally weighted companies that offer some of the highest dividend payouts, but at the same time offering low volatility. And this is going to be a mixture of common stocks. We're going to be seeing REITs. We're going to be seeing MLPs, which are master limited partnerships. Now you're going to be seeing companies such as Gladstone Commercial Corporation, Blackstone, China Power International, Imperial Brands, Citic Telecom, and more. One of the other things that's fantastic about this company is that it's had consecutive monthly dividend payouts for the last 9 years. So the second one on our list is Global X Super Dividend US ETF. This has a ticker symbol DIV, net assets of $693.77 million, a total expense ratio of 0.45%, a 12-month dividend yield of 5.92%, and the share price $20.45 as of this recording. So this fund was established in 2013, and simply think of this as very similar to the last one we just talked about, but it's the US version. And so instead of tracking 100 companies worldwide, this one's tracking 50 companies based in the US. So once again, it's going to have some of the highest dividend payouts with companies that offer the lowest amount of volatility. But you're going to be seeing companies such as BP Midstream, Public Storage, Pfizer Inc., American Electric Power, General Mills, KKR Real Estate, Verizon, and more. So the third fund on our list is SPDR Dow Jones Industrial Average ETF Trust. This has a ticker symbol DIA. Its net assets as of this recording was $29 billion, a total expense ratio of 0.16%, and a 10-year average annual return of 13.26%, with the price of $381. Now, what I love about this fund is that it's one of the oldest and longest standing ETFs out there, founded in 1998. And the whole point of this fund is to basically track the industrial Dow Jones average. Now, what's interesting about this fund is that you're actually not going to see a very high dividend yield. So if you notice, I talked about the 10-year average. So while the dividend yield is actually a lot lower than some of the other ones I've mentioned, its overall returns have been really high, which is one of the reasons why I really like this particular fund. Now, the whole idea of this is, once again, to track some of the bluest blue chip stocks out there. So you're gonna be seeing companies such as Goldman Sachs Group, United Health Group, Home Depot, and Boeing. Now be sure to stick around for the very last two, because these next two are going to pay a dividend yield of 14 and 19%. And in addition to that, I'm going to be sharing how to calculate how much money you're going to make based on how much you invest in a dividend ETF. And if you haven't done so already, please be sure to smash the like button, hit the subscribe button, that little notification bell. So the fourth fund on our list is the Invesco KBW High Dividend Yield Financial ETF, with a ticker symbol KBWD. Its net assets is $485.8 million and a total expense ratio of 2.59% with a 12-month distribution rate of 7.5%. So this fund was created in 2010 and it mirrors the prestigious KBW NASDAQ index. And you're gonna find currently 41 holdings within this company. Now what's interesting about this particular fund is that it is heavily weighted. Over 90% of its holdings are in financial sectors. You'll see companies such as Orchid Island Capital Inc., Chimera Investment Corporation, TCG, BDC Inc. So the fifth fund on our list is the Invesco Preferred ETF with the ticker symbol PGX. Its net assets is $7 billion with a total expense ratio of 0.51%, a 12-month distribution rate of 14.02%, and its share price as of this recording is $13.95. So this particular fund was designed to replicate the performance and yield of the ICE B of AML Core Plus Fixed Rate Preferred Securities Index. Now this is a really huge fund. It has 294 different companies in its holdings, but much like the Invesco KBW fund that we just talked about, this one also is highly geared towards financial sectors. Now what I love most about this particular fund is not only does it have a really massive asset size, but most of its holdings are in BBB rated funds. Some of its holdings include Citigroup, JP Morgan Chase, Wells Fargo, and Bank of America. Now the sixth and final fund on our list is the iShares Preferred and Income Securities ETF with a ticker symbol PFF. Its net assets is $18.75 billion. It has a total expense ratio of 0.46% and a 12-month return of 20.6%. And its current share price as is recording is $36.83. So this particular fund is great for all of you interested in earning the highest dividend yield possible while minimizing risk. Now this particular fund is trying to track the US Preferred Stock Index, and most of its companies are going to be weighted in the financial sector, banks, and also utilities. One of the things I love most about this as well is that no company has more than about a 2.5 to 3% weighting in every individual holding, which means it's very well diversified and very well protected. Some of its holdings include Broadcom Inc., Wells Fargo, Bank of America, and Avantar Inc. Now when it comes to analyzing dividend ETFs, whether it's monthly or even quarterly, there's a few things you should look out for. Just because it has a really high dividend payment does not mean it's going to be a really good investment. Some companies actually offer really high dividend payments, but very quickly end up losing a lot of steam, either missed payments and or they're doing it to entice a failing company or stock in general. So the first thing that you want to look out for is the overall asset size. Typically funds that have $150 million or less are going to have a really hard time making those consistent payments every single month. And in fact, since 2014, 1 in 4 ETFs have gone under. Now, the second thing you want to be looking out for is the history of dividend payments. So the easiest way of doing this is going on the fund site, or you go on to things, something like Yahoo Finance, which you could look at the history of their dividend payouts. You want to make sure they've had solid consecutive history of monthly dividend payouts year over year. Now, the last thing we're going to talk about is how to calculate how much money you're going to make off these monthly dividend investments based on how much money you invest. So the first thing you're going to do is you're going to take the amount of money that you invested and you're going to multiply it by the dividend payout. This is going to give you your annual return. Next, you're going to divide that by 12 months to understand how much you're going to get paid each month. So let's say that you invested $10,000 into an ETF or fund that paid out a 7% dividend ratio. Well, you would simply take $10,000, you'd multiply it by 7%, which would give you $700 per year. Next, you're gonna take that $700 per year and divide that by 12 months, which would give you about $58.33 per month. But those are the top 6 monthly dividend ETFs that will help you make money passively every single month. Now, if you liked this video and you haven't done so already, please be sure to smash the like button, hit the subscribe button, that little notification bell. If you're all about money, investing, entrepreneurship, living life on your terms, this is the channel for you. So please be sure to check out some of my other videos. I will leave some links below in the description box. But thank you so much for watching. Let's go out there and let's build that dream.